Hey, this is Mac with PriceActionTradingSystem.com. Today is Tuesday, December the 4th. This will be our chart lesson for today. Really all we had was a trading range today. We had a nice little, we had a trend going each direction each time, and if you just use your trend lines, you see this trend line was coming up. We had a little channel here. We broke it. Two legs up, and then we had a trend that was working down. We broke that trend leg, two legs down, then we were working up. We broke that trend line, two legs up, and then we trend down again. So if you just followed your trend lines, pretty much working off the first couple of swings of each time, then it was fairly straightforward. It was a little confusing in here, but you just had to treat this pretty much like a trading range, and I think if you did that, you'd have been okay. But if you had your trend line working up through here, you should have seen the break. You would almost think this would be enough, but we made one more run up and then worked down, and we really found a lot of strong resistance for most of the day right here at 1407 area, 1408 area, 1407, 1408, and we just really couldn't get past there. So it was really a good place to short almost anytime prices got up there today. But let's talk about each of the trades. Let me back out a little bit so it's easier to see. We'll talk about each of the trades, and then we'll wrap it up today. It's going to be fairly straightforward today. So again, the market opened right in this area right here, and we had a kind of a failed second entry long, but there's no real good setup here, so no reason to be going short. And by not going short, you were able to catch this trap, and then now you got a failed second entry short that reverses, and that's a nice strong reversal bar. Really, you almost could have gone long right here because you got this little double bottom, one tick failed lower trap, then prices closed right here, and then it turned up. So when it broke above there, you could have gone long, but definitely by here, you're probably thinking, well, now we're so close to these highs, but here's your real highs up here that you got to come back and test. I liked it better entering right here, but this is entering above a fairly bearish bar, but what makes it okay is this short trap. First entry short, second entry short, it fails, it reverses. You're looking for a retest of the high anyway. You got a little one tick trap down here below this double bottom. You got higher lows compared to these lows, and you really got to be thinking measured move here. There's your first leg, and you move that up, and you see your target. You're going to be thinking up here, and we didn't quite get there. But really what you got is you got this leg up and then this leg, and that's a perfect measured move right there. So that should have alerted you to be looking for a sell right in here once we started this leg up. But nice long entry right here. Again, you kind of got this working back, and you got a failed second entry long here. It's possible you might have gone short there, but look at all these overlapping bars, all these dojis. It's just not a really good setup. And even though it would have worked, I didn't mark it. I didn't take it. It wasn't worth taking. And you see what happened. Even though it would have worked, it suddenly gets down here and it snaps back. It has it. Look at this reversal bar. That's a nice reversal bar after break below there. I got long right there on that those two bar matching lows right there. Normally I like to see them a little further away from the EMA like that, but I like the way this one's set up because we were breaking out of this stuff right here, and generally when you start overlapping, you're gonna, after coming out of that, you're gonna get a snap back. So I figured that from right here there's enough room to get out before you come back up here. So I risked it on that and ended up getting easy runners out of this and getting to ride this to a new high and getting a couple of points out of the runners there. Actually, it's about a little over 3 points that I got out of those runners there. And so a nice trade there. And then, of course, you're looking for a measured leg. And so I was looking for my target up here, and that's a perfect measured leg. We're exactly to the target. And then you're looking to reverse up here on this move because now you got your break. You got two legs up for sure. Even if you didn't wait on this one, when you got this little pull back right here, you had a second chance to enter right there. And you got to be thinking, hey, we're coming back down here to these lows, maybe these lows, and possibly even to these if this turns out to be a trading range day. And that's exactly where we went to. The depending on how you enter this, I tried to get short on another limit order here, but couldn't get filled, so I entered under this little bitty bar right here. And guess what? Any runners were safe on this trade as well, and you were able to ride this down. And even if you got out down here at these lows, you know, you're looking at from 0.10 or so all the way down to 0.6, so another 4 points. So just these couple of trades right here made you, you know, 8 or 10 points. I'd say legitimately 6 to 10 points, somewhere in that range, just on those two trades. So nice setups, and then of course you got your trend line coming off these first two swings right here, and you got a touch right there. Nice bearish bar, and it's a second entry short. So, and after that big move down, now you got to be thinking, hey, we may get a measured move like that one. So you could have entered either below this little doji or this one or this bearish bar. But by the time you got down here, it's a little risky, and you can see we snapped back. So there was another entry right here, and this is as good as a breakout pullback short. Anytime you come down there and make a double bottom and then pull back and don't go very far, then again, it's coming right off this trend line that we've now tested once, twice, 3 times. That's pretty good. So you could have gone there. Either one of these entries was only good for a scalp. If you got in up here, you know, or actually it'd probably be this bar, you might have got a little more than a scalp on your runners, but this just turned out to be really strong support down here, and we tried getting through it all day and finally forced kind of through there and reversed instantly out of there again. So this is definitely strong support down here, and you need to be paying attention to it every time we come down here. But now you finally got a break of the trend line. I didn't like entering here because you do have strong support. There's not much room, and you can see we reverse. I didn't like going long here either. But that is a nice little reversal bar. If you saw that and took that long, thinking that, hey, it might be good for a scalp, you probably were okay on that, but I just didn't like that trade. But looking at this, that it's possibly going to be a trading range day, it does fit our criteria. So I tell you what, I should have probably marked that one in green, and I'm going to go ahead and do that. So if you saw that trade and took it, I can understand why, and it does fit our criteria. It's a little more aggressive though, because it's the first break of the trend line. We don't even really, I wouldn't even call that a leg. I believe this is your 2 legs down to a new low, and then we reverse. So they'll trick you like that sometimes, but you can see that would have easily worked. And when we came back up here and broke a tick or two above these highs and turned down, and even though that's got a little bit of green right there, that could have easily closed right there, 1 tick lower, and you know that little 1 tick could be noise. So that's kind of a bearish reversal type bar. You know, we closed almost on its very low, and the way ticks work, that could have easily ticked 1 tick lower right on its last tick as it did up, and so it was really worth going short right there. But if you didn't go short there, when you ticked back up and got that little trap right there, you see we went 1 tick higher and then turned down again. You could have gone short right there, and either one of those was pretty good, because now you got a test of this high again, a lower test, and even though it didn't break below that bar, you got to be thinking that we're still going to test this low, and any runners would have been safe on this one. You could have ridden it all the way down. Depending on where you exited, they probably came back and got your runners right here, but there's not really a good setup here until we broke lower and then pulled back, and then it's a breakout pullback short, and it's a failed second entry long. Let me show you that. You got a new high right here. You pull back, first entry long, pull back, second entry long, and again, that's a very bearish bar. Even though it closed looking like a doji, look how far down here it closed, and that could have easily closed 1 tick lower, just like that bar, and that's a very bearish bar, and you got to be thinking, hey, we're probably going to make a new low. If you didn't take this one, it wasn't a, you know, you probably were thinking straight, because you see we didn't go very much further low, and then we bounced, because this is strong support. But you got to be thinking we may test these lows again at the very least, and there would be enough room to scalp out there. And but we went on down a little bit. Turned out to be a pretty good trade right there. Your runners were probably worth a couple of points, and what I did was when we broke lower, I just exited instantly, and it of course it bounced. And you actually could have considered going long above that bar, but I didn't like that because you had to, your stop had to be, you really couldn't get your stop very, it's a huge stop in case it pulls back, and you see it did indeed pull back. But when it turned back up, and again, this is kind of like these other two. I don't know if it was just my chart today, but it seemed like we always closed, just as it ticked back instead of as it ticking forward. But that's good enough that it could have easily been a little green piece right there. And that's a bullish type reversal bar. And you can see we broke higher. No runners here. They came back and got the runners on this one. But it was kind of choppy all the way back to the upside. And now we got a failed break lower. So I honestly figured we'd probably go back and try to test the highs here. But this just proved to be strong resistance. And you could have thought about going lower right here, going short, but it never triggered. And then you had another bar. Then you got two, and this one did close on slow, but you got two overlapping bars. And if you took that one, you might have got stopped out. This is those cases where I'm always telling you, give it at least 2 ticks. And I'll show you this. There would have been your high, and you would have had your stop 1 tick higher at 1408.25, where if you gave it 1408.50, you survive. And you see that over and over. You get that 1 tick higher. So that's why I like to be able to get 2 ticks if it's inside 2 points. You never want to give it more than 2 points. And that's why I didn't like entering right here, because you couldn't get 2 ticks below this and be inside 2 points. So I waited, and I'm glad I did, because it did snap back and then it takes off. But same thing here. If you entered here, you could have gotten stopped out, but then it comes back and it tries to go lower again. And notice this one, it closed a couple of ticks off its low, so it's a little different than the last ones. That's more like a doji. And then we had the failed second entry long, and actually that's not really a failed second entry long, because we did make a little bit lower high, but this is all just noise, and all this is just overlap. But when we ticked higher right there and turned down, that's a really bearish bar. And if you were watching this trend line, you still may not have wanted to enter there, but I took this trade, so I marked it because it was looking like a trading range, and I was more interested in these highs with all these stems up here than I really was the trend line. But looking back on it, I probably shouldn't have taken that trade, but it's a second entry short. There's a little bit of room before coming back and testing this high here and testing the EMA, and you can see it got real choppy. And what I ended up doing, I didn't get a full scalp on this. I just I scalped out, I think, with 3 ticks, and I called it a day right there. And then it's really, there's just not very many entries in here, and you can see how it got real choppy. And so that was another reason. It's just not, when you start to see all that overlap, as tempting as it is, even with that negative bar there, a lot of times you may want to reconsider it. And even though you would have made a good trade here, and even if I'd have hung on to this, I could have gotten a full scalp out of it. It wasn't worth the risk, because I've already had a really good trading day, so why risk this trade? If you get hung in this thing and then all of a sudden it hangs up like this, just exit, because you see it did go higher. And if you didn't get out and you held on, you might have got trapped out up here only to see it come right back down again. And you got a nice double top here with a reversal bar. And again, though, once it got back in this area, you see it got hung over. But this is real late in the day, and it's just not hardly worth it. So really, once we got to this point about 1 o'clock today, they're just, you can see from 1 o'clock till the close, there wasn't anything happening. I mean, there's not much volume. I mean, there wasn't a whole lot of volume. Yeah, I guess the day overall wasn't too bad, but really from about 1 o'clock on, there just wasn't any volume. There wasn't anything happening. And for that reason, you just kind of got hung up here. So best just to call it a day. I always believe in doing your trading in the morning and getting done as early as you can. I like to be done by lunchtime, definitely by 1 o'clock. It's very, very rare that I'll take a trade after 1 o'clock. And the reason being is that if you make a mistake in here late in the afternoon, you don't have time to recover. And you see there's not much movement here to even make any money if you did get it right. So it's my opinion that, make your, trade in the morning. That way, if you make a mistake, you got all the rest of the day to try to make it back. And, at least you maybe can get back to scratch, where if you make a mistake late here in the afternoon and you lose your money, you don't get enough movement to even make it back here, at least not today. And it's not always this way. Sometimes you'll get some good movement, but it's just not worth trading late in the day. That's my opinion. And, maybe it's just a personal thing, but I honestly believe that, and I do know for a fact that more of your retail type traders, which are traders like me and you, the ones of y'all listening, tend to be morning traders, and in the afternoon there's more professionals. And that's probably why it always feels like it's harder to trade in the afternoon too, is because you're trading against the better traders. There's not as many of your inexperienced traders that enter right up here at these highs and get trapped. And that's what makes this work, is you get all these traders that start jumping in right here near the highs, and then suddenly it's reversing, and what happens, they got to exit, and it starts hitting all their stops and running it down, and it gives it enough momentum to get through the other side. And the ones that entered right in here, this is where they this is where they put their stops right down here, and this is where they throw in the towel. And guess what? A lot of them will reverse right here. So they went long right here, and then they get stopped out and reversed right here. And guess what? It goes straight up, and then they figure out, oh no, I'm wrong again, and they start exiting, and it comes down, and it's going lower again, and they're thinking, shoot, I'm wrong again, and I'll be dang, they don't reverse and go short again, and then look, it bounces again. And that's what happens on these kind of days, is that most traders are getting long up here at the highs, and they're getting short down here at the lows, and they're just getting chopped to pieces. So don't do that. Do not make that mistake. You want to look to get short up here and get long down here, and it's really hard to do. It's hard. Look how bearish that looks. The really good traders, the ones that went long right down here, because they're the ones that get the real benefit. And the really good traders are the ones that go short up here right before it takes off to the downside, or short up here. But what'll happen is most of your inexperienced traders, they're getting long up here and they're getting short down here, and you can't do that. You will never make money. And you've heard me say it before, but you got to have intestinal fortitude to short this up here. But once you do it and you start to understand that that's the better way to trade on a range day, it'll start to get easier for you. And what you'll do is, just about the time you get the hang of it, then you'll have one that breaks through and doesn't fail and takes off, and you'll be on the wrong side. So you gotta learn to see it both ways, and you eventually will, but you'll have to work through both types of trading days over time and quit trying to anticipate it and learn to actually read it. So, but I've talked enough today. Hope you had a good trading day. I hope you're having a good trading week. You can see, I believe the volume is starting to slow down as we go into the end of the year, and you'll notice this will kind of accelerate as we get closer to the end of the year. You won't see as much volume. There'll be less and less traders, and a lot of them will take off. A lot of them are probably already starting to take off. Doesn't mean we won't get some movement, because there will be some end of the year tidying up to do by the funds and the guys that actually move the market. So we'll get some moves, but you'll notice it'll be on less volume, and at some point I'll probably take off, probably the last 2 weeks of the year. We'll just have to see kind of how things are going, how my year is going, how my month's going, and we'll go from there. But anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.